Go for Chambers.
Hey Brandon, hope you're doing well, sweetie.
Oh, hey Grandma.
I was just calling because I know you work for Bitcoin, and I saw on my news program that it's doing really well, and I was just wondering...
I don't actually work for Bitcoin. You see, it's not actually
And well, I was wondering what's the best way to buy some, because I was thinking about...
Gary? Yeah, close out all the Bitcoin longs. Close them
There's
out.
this Jim fella on the TV. He's got a baseball bat. He went to Harvard,
Load up shorts as well.
And he's saying that now is a great time to buy Bitcoin, so I just figured that maybe
Grandma,
we should...
I'm gonna have to call you back. Hey there, I'm Brandon, and this is Trading Mindset. If you couldn't tell by my phone call just now, today we'll be talking about crowd behavior, contrary thinking, and how they can apply to trading and market extremes. A contrarian trading strategy, simply put, is doing the opposite of the majority of market participants. It forms the idea that when an overwhelming majority of traders are in agreement about the direction of a trend, an imminent reversal is the most likely outcome. Now, what are some of the tools and indicators used to determine when a market has swung to an extreme? Veteran contrarian traders have mentioned keeping an eye on financial newsletters, TV analysts, and major headlines, while modern investors mention Google Trends and social media analysis. In 2014, Greenwich Associates, a financial analytics company, surveyed over 250 institutional investors. They revealed that nearly 1/3 of participants had made an investment decision based on information from social media channels. So when your significant other asks why you're spending so much time on crypto Twitter, there's a link to the study in the description. However, my favorite example of contrarian trading strategy comes from illustrious commodities trader Ed Seykota. In the book The New Market Wizards, author Jack Schwager tells an anecdote of Seykota speaking at a seminar. He mentions the use of magazine covers as a signal of an imminent market reversal. He gives 3 examples from the 1980s that almost perfectly align with market tops and bottoms. So let's have some fun. Try this with crypto markets. The first that comes to mind is the recent Vitalik cover from Time magazine. Let's see when that one came out. What about that Rolling Stone Bored Ape cover? Maybe Newsweek. How about The Economist? Forbes? Barron's? Pretty spot on, Seykota. Now that all sounds great, but I don't think I can afford to subscribe to 40 different magazines and wait for Sergey Nazarov to show up on the cover. Couldn't we just use popular chart indicators or technical analysis and trade the opposite? In 2014, this was actually tested. A study published in the Journal of Applied Business Research explored this exact question using the Nairobi stock market. It concluded that contrarian trading rules do in fact have predictive power, and in theory, a system could be built that beats the classic buy and hold strategy. Now, contrarian thinking is one of my favorites and an absolutely fascinating subject in the world of behavioral economics. However, the environment is constantly changing and every market is unique. There's no guarantee that what worked yesterday, even for Ed Seykota, will work tomorrow. Always implement proper risk management and do your own research before entering a trade. Thanks for watching Trading Mindset. Like the video if you learned something new, subscribe and hit the bell to be notified of new episodes. See y'all next time.